the SEC, and the evolving landscape of cryptocurrency regulation in 2023. Welcome to CryptoQuest. Initial cryptocurrencies were a decentralized and unregulated financial system that gave users full authority over their transactions and investments. However, governments and regulatory organizations like the SEC supervised the market as it became a multi-trillion-dollar business. Regulation is necessary to protect investors, maintain market integrity, and prevent criminal behavior. The SEC considers many cryptocurrencies securities, therefore they must follow federal securities laws. This strategy has resulted to major lawsuits and decisions that will shape cryptocurrencies. Number 1. The SEC's stance on cryptocurrency. What exactly is the Howey test, and how does the Securities and Exchange Commission (SEC) consider cryptocurrencies to be securities? Using the Howey test, which is a legal framework that is used to establish whether an asset is an investment contract, the Securities and Exchange Commission (SEC) has repeatedly claimed that many cryptocurrencies meet the criteria for securities. This criteria defines a security as an asset with a financial investment. A shared business is the recipient of the investment. A profit that is earned from the labor of other people is something that has to be anticipated. On the basis of this definition, the Securities and Exchange Commission (SEC) has classified tokens that were distributed via initial coin offerings (ICOs) as securities, along with other cryptocurrencies. Players in the sector have voiced their disagreement with this viewpoint, arguing that the approach taken by the SEC is too broad and stifles innovation with its approach. Number 2. SEC's key actions in 2023 major lawsuits and enforcement. In what ways did Coinbase come up with a response to the allegations made by the SEC about its staking program? Lawsuits against Coinbase and Binance. In 2023, the Securities and Exchange Commission (SEC) initiated legal proceedings against Coinbase and Binance, two of the most prominent cryptocurrency exchanges in the world. Regarding Coinbase, the Securities and Exchange Commission (SEC) said that the company violated federal laws by offering unregistered securities via its staking program. Coinbase contested the assertions, arguing that its staking services did not qualify as securities and therefore did not require registration. The Securities and Exchange Commission (SEC) has accused Binance of failing to comply with securities regulations and mismanaging the cash of its customers. Concerns about investor protection, corporate governance, and transparency in the cryptocurrency field were brought to light by this litigation. Shockwaves have been sent across the business as a result of this litigation, which has established a precedent for the way exchanges function in the United States. Approval of Bitcoin ETFs. What made the decision of the Securities and Exchange Commission (SEC) in 2023 to allow Bitcoin exchange-traded funds ETFs a significant one? The Securities and Exchange Commission (SEC) gave market approval to exchange-traded funds ETFs that directly invest in Bitcoin, marking a historic move. The regulatory environment has undergone a substantial change as a result of this decision, which indicates that institutions are beginning to adopt Bitcoin. One way for investors to obtain exposure to Bitcoin without directly holding the asset is via the use of Bitcoin exchange-traded funds ETFs, which provide a more accessible and regulated entry point into the market. The repercussions of Bitcoin's popularity among the general public have improved. The market's liquidity is increased. Since institutional investors are entering the market, there is a possibility that price volatility may decrease. Despite this, the Securities and Exchange Commission (SEC) continues to exercise caution and emphasizes the need of providing adequate investor safeguards. Number 2. The broader implications of SEC regulation. Influence on creative endeavors. If compliance expenses increase, what factors would make it less appealing for blockchain developers to operate in the United States? There is a huge source of worry among the cryptocurrency community over the possibility that too stringent regulation might impede the advancement of technology and innovation. When severe regulatory frameworks are implemented, startups and blockchain developers, who sometimes have little resources at their disposal, may have difficulty dealing with the increasing compliance expenses and complicated legal requirements that accompany these frameworks. There is a possibility that this additional burden may hinder innovation and prevent entrepreneurs from pursuing ideas that are revolutionary. Investor protection. The Securities and Exchange Commission (SEC) contends that regulation is essential in order to safeguard investors from fraudulent schemes, market manipulation, and scams. The cryptocurrency industry has been plagued by high-profile failures, such as the collapse of FTX in 2022, which resulted in the loss of billions of dollars in investor cash. The SEC's goal is to create an environment that is more trustworthy and secure by implementing laws that are more stringent. The volatility of the market. How do lawsuits filed by the SEC impact the patterns and pricing of the Bitcoin market? The activities of regulatory agencies can cause major market volatility. For instance, the lawsuit that the Securities and Exchange Commission filed against Coinbase and Binance resulted in a temporary decline in the value of a number of cryptocurrencies. As a result of investors seeing the acceptance of Bitcoin exchange-traded funds ETFs as a sign of legitimacy, the price of Bitcoin saw a rise. Given the market's volatility, the importance of regulation in shaping market movements becomes evident. Number 3. Challenges in regulating cryptocurrency. An absence of coherence. What types of issues arise when the SEC and the CFTC classify cryptocurrencies differently? On the list of the most significant issues is the absence of a regulatory framework that is both clear and uniform. Cryptocurrency is classified as a commodity by the Commodity Futures Trading Commission (CFTC), in contrast to the Securities and Exchange Commission (SEC), which considers it to be a security. The regulatory framework's vagueness leaves both enterprises and investors feeling confused. Coordination on a global scale. What kinds of difficulties are brought about by the absence of international cooperation in the regulation of cryptocurrencies? Despite the fact that cryptocurrency is active on a worldwide scale, the legislation that governs it differs greatly from one nation to the next. One example is the Markets in Crypto Assets (MiCA) law, which was implemented by the European Union. This regulation offers a complete framework for digital assets. Trading in cryptocurrencies has been completely prohibited in China. It is difficult to implement standards that are uniform across borders because there is a lack of international coordination. Balancing innovation and regulation. To what extent does excessive regulation threaten the technical achievements that blockchain technology has made? Creating an environment that encourages innovation while still protecting consumers is a challenging endeavor that requires careful advancement, Sun. When there is little regulation, investors are left exposed, while excessive regulation has the potential to stifle technical developments. Number 4. The future of cryptocurrency. Regulation. The future of the cryptocurrency industry will be shaped by the developing regulations of the Securities and Exchange Commission (SEC). The market for cryptocurrencies is now at a crossroads, as regulation is becoming an increasingly important component in determining its destiny. It is anticipated that the market will be considerably impacted by the developing enforcement techniques of the SEC, as well as the possible response to input from the industry. A comprehensive piece of legislation, such as the Digital Asset Market Structure and Investor Protection Act that is now under consideration, has the objective of bringing clarity to the regulatory norms. In addition, international collaboration is essential in order to handle the global and borderless character of cryptocurrencies and to implement legislation that is uniform throughout the globe. Love fashion as much as we do? Share this video and subscribe for more exclusive content and behind-the-scenes stories.